Taxes suck. That's why it's a good thing you came here. What are we talking about today? We're talking about the difference between income and cash. And if you're a business owner, you better not be unsure about this. Let's go talk about it. Now, the first thing you have to know, income. It's going to show up on your income statement. That's the whole reason you put everything in that income statement. All your stuff's going to go in there, all your income, all your expenses. You're going to organize it in a good way for yourself. And then it's going to tell you what your income is. And that's what you get taxed on. That is what you are going to pay taxes on at the end of the year. Your cash is an item on your balance sheet. It is the amount of money that you've taken in from, usually related to income, but definitely not correlated 100% of the time, and there's many reasons for that. We're going to take a look at the income statement versus the balance sheet. We want to get a feel for how this works because you have to understand that your cash balance is not going to tell you the state of your business when it comes to income. Now, a lot of numbers here on the page, but stick with me, don't get scared away. Let's take a look here. We have revenue up here. I don't know why. This is from the Corporate Finance Institute. It's not great that they misspelled revenue, but we're gonna roll with it anyway. Right here is what we wanna look at. So we're at the income statement right now, and you can see net earnings, net income, right there at the bottom. Now, they're pointing out another important relationship here, the old income to retained earnings relationship. We're not gonna worry about that right now, because what we're talking about is income versus cash. What we wanna look at is right here. If I highlight the income, and I highlight the cash, they're obviously clearly different, right? And this is the big issue that a lot of business owners find themselves getting into, is it's really easy to look at your bank balance and think that things are moving along fine, or maybe not moving along fine, right? It can go both ways. It can make you feel good about yourself, or it can make you feel bad about yourself. And it could actually be different in real life if we're using our income statement to the best of our ability. So what we have here is where we can clearly see that cash is on the balance sheet and income is a completely separate idea. The whole idea that the income will roll into cash is definitely important. That's what should happen. You collect on the money you're owed. But a lot of times, a lot of businesses, what happens? They run on AR, they run on AP. You have items on account. You're not always receiving cash when you've actually made sales, or paying out expenses when you've made sales that you're due to be paying. So what does that mean? There's always timing differences between what's in your bank account and what you're actually making. And tracking that difference, the AR, the AP within your business, is one of the most critical things you could be doing as a business owner. You have to have a keen eye on that. It's the main thing you have to be understanding within your business, how it works, right? Being in tune with that, understanding the why your cash flows a certain way, why your bank balance and your income are different, what trims that gap, understanding that is going to put you ahead of 99% of business owners out there. If you can do that, you are going to succeed financially if you can keep your business selling and on the right track. Cash, income, related, but totally separate when you get into the business side of things. Make sure you understand that. Make sure you know how AR and AP glue those together specifically within your business. My name is Matt Speckman. I'm a CPA. Taxes suck. That's why it's a good thing you come here to somebody who understands it. See you next time.